All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We're seeing something fairly unusual here in this Fed reaction, and that is the fact that there's been a singular reaction. There hasn't been a initial drop and then pop, or initial pop and then drop. It's pretty much been a singular reaction here to the upside, at least so far. Right? We're still, these things are, the Fed reaction has gone from a 30-minute reaction to what it used to be to now there are multiple stages in the last 2 hours of trade, and then it tends to finalize in the open the next day. So it's one of those where there could still be some tears here associated with this reaction, but it is strongly to the upside. And it's some of the stuff that has been the biggest gainers on the day adding to the gains. Other things that weren't as big of gainers today, yet they're ticking up. They are definitely ticking up, but a lot of things that were winners on the day are simply adding to those, wins here today. So that's what we're seeing initially. We talked about going into this that the Fed was likely to give the markets what they want. Confidence, just this idea of, hey, you know what, there are risks out there, and we know they are, and our policy right now is neutral because of it. And Powell has basically done that. He's just reiterated everything the Fed has said over the last 3 weeks, and without a whole lot of new, without a whole lot of difference, without a whole lot to take from it to go, well, wait, this all of a sudden changed. It's the same beat, same drum, that they had, kind of made a change with, about a month ago here now, after they saw the December drop in equity markets. Talk about political and not being influenced by the political, and so kind of the same old stuff. A little information about balance sheet unwinding, but yeah, that's kind of what is going on, and you tend to look at a jump like this and think, oh, well, something major changed. Well, the reality is no. And we talked about going into this that, we're likely to see a 20 to 25 to 30 point reaction, here to the Fed, even if nothing really is said or nothing really is done. And we have seen that. We have seen about a 25, 30 point reaction here to the upside. We're starting to get a little bit of selling come into play here, about 8 points to the downside here in the last little bit. But we've had that level of reaction, here to the market, at least so far. But overall, what are its implications for things going forward? Well, if we take a look at some other things here with the Fed, you can see the U.S. dollar falling on the Fed, and falling pretty good. I mean, this isn't a small reaction. So if you look at the euro versus the U.S. dollar, I mean, here's the euro, jumping to the upside here. We're seeing gold continue to jump to the upside here on this. And so we've seen a pretty good currency reaction. That bodes pretty well for materials going forward. And, may make a little bit of a case for a little bit of lag in U.S. small caps, but definitely a positive for the euro in terms of the price action, seen. Bonds, the TLT. Here's the thing. We're seeing the market react and the market itself go higher and have a 30-point reaction, but the TLT is pretty much at the exact same level that it was. We're not seeing bonds move on this. And, a lot of times when we don't see bonds move on it, it's something where a reaction has a greater chance of being erased. But that's a greater chance. Not that it has to or anything like that, but that risk is a little bit higher. But, we see that fairly flat, nothing really to, take from it. Even the banks, which I know I have some XLF puts in XLF, has jumped 15 cents here on the Fed, but even that reaction is pretty muted. Right, the bank's up 15 cents, the XLF up 15 cents here. With the market itself jumping 1%, a fairly muted reaction in the banks here overall. We still see Bank of America trading negative here, so it's not, again, it's not everything kind of just mass jumping all together. There's some differentiation, and there's a big currency move, and there's really just not much of a bond bank type of move out there. In fact, if you look at the S&P, right, you look at the S&P, you see it pushing into new highs, and it's breaking this kind of island doji candle here, abandoned baby, whatever you want to call it. It's breaking that, and what it's doing, though, is it's breaking it while the financials are not breaking into the new highs. And that's, is there something to it? I think the only thing to read from it is the fact that the market isn't looking at this as a big change in Fed policy and a big change in outlook going forward. The market's not seeing this as change. The market's seeing this as, okay, all right, there's a little stability here. Okay. And the market's throwing some money in. Now, some are going to call it, a little euphoric. I'll be one of them, to call this move a little bit euphoric here. But at the same time, and we've talked about, in terms of the S&P, here's the support level that could turn resistance. And, we've seen some consolidating here at this level. But there's nothing about this that says we can't see the market push up even a little bit higher here. And, I think there's a pretty substantial risk with this move of seeing, a little bit more move higher. We are going to go into the end of the month, typically a little bit of sell action into the end of the month. But, again, we are not in a typical end of month type of scenario here. In the market. All right, so that's kind of where things are. We have a lot of earnings after the bell here today, and for the market to digest. And we talked going into this earnings season, there are these days, and we will have days throughout the earnings season where it seems like every company that reports goes up, and we see the market move up very nicely with it. And then there will be a day or two where, the companies that report, it's just kind of a little bit sour, and everything drops on that day. And I do think we will have one of those days. I'm not saying it's going to be tomorrow or Friday or Monday or anything like that. But, I think today kind of increases the risk of that. As we go into tomorrow, General Electric in the morning, which I don't think says anything about the broader markets at all. UPS will, Conoco will have a lot to say about, the energy market. In fact, we'll see Valero, Conoco, Consol Energy, so some big energy market earners, Hershey in the consumer staples area, Northrop Grumman in the defense area. But Amazon after the bell tomorrow. And then today after the bell, which is kind of where the tone will start to get set, Tesla, Facebook, Microsoft, Visa, PayPal. I mean, these are some major names. Qualcomm, all reporting after the bell here today. Wynn Resorts, U.S. Steel, which we've talked about a lot. All reporting after the bell here today. And U.S. Steel catching an upgrade ahead of the earnings here today. Found that quite interesting. Talking about its valuation being pretty darn cheap. And so, yep, there. We'll see how that ultimately plays on out here. But a lot of things on deck here this afternoon. A little bit of a interesting three: the Tesla, Facebook, Microsoft here after the bell, and in terms of what the reaction. But I think something like a Visa is going to be a little more telling to what's going on economically than a Tesla. something like a Wynn is going to be a little more, telling economically than a Facebook. But, obviously the reactions, will be watched and will matter. Now, the overall market metrics, it's one of those things where, you see the bullish percent index continuing to climb higher here today, right? So, nowhere close to any sort of bearish region. We are seeing the market vibe push up to an 8 right here, which is still a neutral signal with how things have played out. But we are talking about the bulls having control of pretty much every single metric out there in the market. More than 80% of the stocks are trading above their 7-day moving average, so starting to get into that overbought region. The number of stocks trading above the 20-day moving average, 90% trading above the 20-day moving average. We rarely, even in the most bullish of markets, see a number this high, but that's what we're seeing right now. So, the metrics are firmly in the grasp of the bulls here. And we do see them, carrying on higher here today, but no real sign of weakness, no real sign of deterioration coming into play. In fact, just continued adding to some of the recent strength. All right. Now for the challenge, I have XLF, and yes, it's kind of a muted reaction relative to the market, but at the same time, it's still, trading higher, which doesn't help my position here at all, and I'm very much running out of time. This is something where I'm going to hold it here, and, we'll see if, this is kind of a whipsaw reaction. See if we see some, drop. I don't need much of a drop to be able to take something significant out of it. And with end of month and jobs data, here on Friday, there's a chance. And, so I'm going to hold it and take that. Been asked, hey, what do I do if it doesn't work? And what am I going to do? Blah, blah, blah. Well, bottom line, whether XLF works or not, whether I pull it out for something or, it ultimately expires, I will be starting up a new challenge, not this coming week, but the week after. Okay, so regardless, I will start it. I will start a brand new challenge on. I believe that is the 11th of February, and so we'll start there. Going to do something a little bit different next week, and we'll discuss that here tomorrow in terms of what's coming here next week, and looking forward to it. I think we've seen a lot of good information, a lot of very tradable information from this earnings season, and it is something where I expect there to be plenty of movement in the markets over the course of the February, March, April time period. I do expect still that February sees a substantial pullback, but again, there's no real major sign of that coming into play here just yet. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.